Is a $5,000 payment actually hitting your account this week? With 2026 bringing a 2.8% COLA increase and major shifts in the Social Security landscape, the headlines are swirling. But you need the hard facts before you plan your budget. Welcome back. Today, we are breaking down exactly what is happening with Social Security, SSI, and SSDI payments for the final week of January 2026. While the maximum monthly benefit for high earners who delayed retirement until age 70 has officially climbed to $5,181, most beneficiaries are seeing an average increase of about $56 per month. However, there is a specific reason why some of you might see extra deposits this week. If you're on SSI, a calendar quirk means your February payment is arriving early on Friday, January 30th, because February 1st falls on a Sunday. This isn't a bonus, it's an advance on your February funds, and missing this detail could leave you short next month. We're also diving into the new $6,000 senior tax deduction that could save you thousands this tax season, and how the $202.90 Medicare Part B premium might be eating into your raise. Don't let misinformation cost you money. Stick around as we clarify the schedule, the double payment rumors, and how to verify your specific amount. If you find this update helpful, hit that like button to help us reach more beneficiaries. Now let's get into the heart of the matter, because I know many of you saw that $5,000 figure and started wondering if the government finally passed the long-awaited Social Security Expansion Act or if a special stimulus provision was triggered for the new year. It is absolutely vital that we move past the flashy headlines and look at the actual ledger for January 2026. When we talk about these high-value payments, we are often looking at a very specific intersection of policy and timing. For instance, the maximum possible Social Security benefit has indeed crossed that $5,000 threshold for those who maximize their earnings over a 35-year career and waited until age 70 to claim. If you fall into that elite bracket of retirees, your check hitting this week could very well be the largest one in history. But for the vast majority of the 70 million Americans receiving benefits, the reality is a bit more nuanced, and understanding the why behind your specific deposit amount is the only way to ensure you aren't being misled by rumors of a universal bonus. The urgency of this week cannot be overstated because we are currently navigating the first full month of the 2026 cost of living adjustment. As we transitioned from 2025, the Social Security Administration finalized that 2.8% increase, which was designed to keep pace with the lingering inflation we've seen in housing and healthcare costs. While 2.8% might sound modest on paper, it represents a significant shift in the total outlay of federal funds. However, the reason people are talking about $5,000 right now often stems from a misunderstanding of how retroactive payments work. If you have recently been approved for SSDI after a long and grueling appeals process, this week could be the moment your back pay finally arrives. For many beneficiaries, those lump sum retroactive checks can easily exceed $5,000 or even $10,000, representing months or even years of withheld benefits while your disability claim was pending. If you are one of those people currently waiting on a decision, you need to be checking your My Social Security account daily, because the Treasury Department often releases these large catch-up payments without a formal letter arriving in your physical mailbox until days later. Another reason the $5,000 figure is circulating involves the complex interaction between SSI and the new tax credits passed in late 2025. There has been a lot of chatter regarding the senior relief provision, which was aimed at providing a one-time bridge for those living below the federal poverty line. While that isn't a direct Social Security payment, it is being distributed through similar channels, leading many to believe their standard benefit is getting a massive permanent hike. We have to be incredibly careful here, because if you see a deposit that looks significantly higher than your usual monthly amount, you shouldn't spend it immediately. You must first verify if it is a corrected payment, a retroactive check, or potentially an overpayment that the SSA might try to claw back later this year. We've seen a massive spike in overpayment notices recently, and the last thing you want is to spend a $5,000 windfall only to receive a letter in March stating that you owe that money back because of a clerical error at the district office. Let's talk about the flow of money for the rest of this week specifically. Because we are at the end of the month, we are seeing the convergence of several payment cycles. For those of you who have been in the system since before May of 1997, your payment schedule follows a different set of rules than the newer beneficiaries. Furthermore, the SSI community is currently preparing for that Friday shift. When the first of the month falls on a weekend, as it does this coming February, the law requires that the SSI payment be moved forward to the nearest business day. This creates a psychological double payment effect in January. You received your first 2026 SSI check at the beginning of the month, and now you are seeing another one land on January 30th. This is where the confusion starts. It feels like a bonus. It looks like a bonus, but in reality, it is simply your February money arriving 36 hours early. If you treat that Friday deposit as extra money, you are going to find yourself in a very difficult position come the end of February when there is no check waiting for you. Staying informed means understanding the political climate in Washington as well. There is currently a massive debate on the House floor regarding the earnings test limits for 2026. For those of you who are still working while drawing benefits, the amount you can earn before your benefits are reduced has increased, but not as much as many had hoped. This affects your take-home Social Security, because if you go over that limit, the SSA begins withholding $1 for every $2 or $3 you earn above the threshold. When we see headlines about $5,000 payments, sometimes it refers to the total household income for a couple where both individuals are receiving the maximum benefit plus a small amount of part-time income. It is all about the context. We have to look at the total picture of your financial health, including the Medicare Part B premiums, which are automatically deducted from your check before it even reaches your bank account. In 2026, those premiums have shifted again, and for many, the COLA increase was almost entirely neutralized by the rise in healthcare costs. This is a frustrating reality that we discuss often on this channel because it feels like the government gives with one hand and takes with the other. As we move through the next few days, keep a close eye on the pending transactions in your banking app. Most major banks like Wells Fargo, Chase, and even online platforms like Chime or NetSpend will show these Social Security deposits up to 2 days early. If you see a figure that doesn't match your 2025 amount or your expected 2.8% increase, there are 3 things you need to do immediately. First, do not panic. Second, log into your online portal to see if there is a Notice of Change PDF in your message center. Third, check to see if any local or state-level supplements were added. Several states, including New York and California, have implemented their own cost of living bridges for SSI recipients that are independent of the federal government. These state supplements are often bundled into the same deposit, which might explain why your neighbor is getting more than you are despite having a similar work history. The conversation around Social Security is changing rapidly as we head deeper into the 2026 fiscal year. There are ongoing discussions about the Fairness for Seniors Act, which aims to eliminate the tax on Social Security benefits entirely. If that were to pass, it would effectively mean a 5 to 15% raise for millions of middle-income seniors without the SSA having to change a single internal formula. While that hasn't happened yet, the momentum is building, and it's why we see these large numbers like $5,000 appearing in the news. It's often a projection of what benefits could look like if the tax burden were lifted. You have to stay grounded in the current law while remaining hopeful for these future adjustments. The sheer volume of information can be overwhelming, but that is why we are here, breaking it down piece by piece so you can plan your rent, your groceries, and your medications with confidence. I also want to touch on the security aspect of these payments. With the news of large checks hitting accounts this week, scammers are out in full force. You might get a phone call or a text message claiming that you need to verify your identity to receive your $5,000 bonus or your COLA catch-up. Please, listen to me closely. The Social Security Administration will never call you to ask for your Social Security number or your bank account details in exchange for a benefit increase. Any adjustment to your pay happens automatically within their internal systems. If someone is telling you that you need to pay a fee to unlock a higher benefit tier, hang up immediately. These criminals track the payment schedules just as closely as we do, and they know that this final week of January is a time when many people are feeling vulnerable or uncertain about their new 2026 payment amounts. Furthermore, we need to address the SSDI trial work period for 2026. If you are on disability but are attempting to re-enter the workforce, the amount you can earn while still maintaining your full benefit check has been adjusted for the new year. This is a critical tool for those who want to test their limits without losing their safety net. Some people are seeing large payments this week because they successfully completed a trial work period and are receiving an adjustment for previously withheld funds. It is these edge cases that often make it into the news, making it seem like everyone is getting a windfall, when in fact it is a very specific group of people receiving what they are legally owed after a period of transition. The complexity of the system is by design, but your strategy should be simple: monitor, verify, and budget. If you are among the group receiving their payment this Wednesday based on your birth date, specifically if your birthday falls between the 21st and the 31st of the month, this is your primary day. This is the big one. If you have a birthday earlier in the month and haven't seen your money yet, that is when you need to start making phone calls, because by the last Wednesday of the month, all regular retirement and disability payments for the current cycle should have been initiated. There is no reason for a delay unless there is an issue with your direct deposit information or a flag on your account for a manual review. We are also seeing a lot of movement in the Social Security Trust Fund debate this year. While the 2026 reports show that the fund is still stable for the next decade, the urgency to fix the system is leading to a lot of test programs. Some of these involve pilot projects for guaranteed basic income for seniors in specific zip codes. If you happen to live in one of these pilot areas, you might be seeing an additional payment that your relatives in another state are not. This geographical disparity is becoming a major talking point in 2026, as local governments try to step in where the federal government has stalled. It's another reason why your check might look different than the national average. As we navigate the final 48 hours of this payment cycle, remember that your advocacy is your strongest tool. If your benefit doesn't cover your basic needs despite the 2.8% COLA, you are not alone. Millions of Americans are in the same boat, and the pressure on Congress to pass a more robust CPIE measurement, which tracks the actual spending habits of the elderly rather than the general public, is at an all-time high. This would change how COLAs are calculated forever and would likely lead to the kind of substantial increases that would make a $5,000 monthly payment a reality for the average worker, not just the top tier. In the meantime, focus on the logistics of this Friday's SSI arrival. Ensure your bank doesn't have any holds on incoming federal funds. Sometimes, when a large double payment or a retroactive check hits, bank security algorithms flag it as suspicious activity. If you are expecting a larger than usual amount due to a back pay settlement or a state supplement, it might be worth a quick call to your bank's customer service line to let them know a legitimate federal deposit is coming. This prevents your account from being frozen at the exact moment you need to pay your February bills. There is also a significant update regarding the Ticket to Work program and how it interacts with SSDI in 2026. For those who are younger and on disability, the goal of the SSA has shifted toward more aggressive vocational rehabilitation. They are putting more money into the hands of those who are actively participating in these programs, which sometimes manifests as incentive payments. If you are enrolled in a qualifying vocational program, check your statement for any reimbursement or incentive line items. These are often overlooked but can add several $100s to your total monthly income. Looking ahead to next month, we need to be prepared for the fact that February is a short month. This means the gap between your January 30th SSI payment and your March payment is going to be exceptionally long. You have to stretch those funds over 5 full weeks. This is the trap of the early payment schedule. It feels like a windfall today, but it's a deficit tomorrow if you aren't careful. We see this happen every year when the calendar shifts, but in 2026, with the higher cost of utilities and food, the stakes are even higher. To those of you who are veterans receiving both VA disability and Social Security, the rules for 2026 have become slightly more streamlined. The data sharing between the VA and the SSA has improved, which means fewer delays when your COLA increases kick in. However, this also means that if you have a debt with one agency, the other is more likely to know about it and potentially offset your payments. Always check your COLA notice letter that arrived in December or early January. It contains the specific breakdown of every deduction, from Medicare to debt recovery, so you can see exactly why your gross pay doesn't match your net deposit. The landscape of Social Security is always shifting, and staying ahead of the curve is the only way to protect your financial future. Whether it's a $5,000 retroactive check or a $56 COLA increase, every penny counts. The power of this community lies in our ability to share information and hold the system accountable. We are seeing more town hall meetings scheduled for February where Social Security officials will be taking questions from the public. I highly encourage you to participate in these, as the voices of real beneficiaries are the only thing that will drive genuine policy change in Washington. Keep your eyes on your mailbox for the SSA 1099 forms as well, which should be arriving any day now if they haven't already. These are the forms you need for your 2025 taxes, and they will reflect the total amount you received last year. Even if you don't think you owe taxes, having this document is crucial for qualifying for other programs like SNAP or LIHEAP, which provide essential support for groceries and heating bills. In 2026, many of these programs have updated their income eligibility limits to reflect the new COLA, so even if you were denied last year, you might qualify now. As we close out this update, the most important thing is to verify your specific situation. Don't rely on what you heard at the grocery store or a random post on social media. Use the tools provided by the SSA, check your My Social Security account, and read the official letters sent to your home. The information is there, but you have to be proactive in seeking it out. The 2026 financial year is going to be a journey for all of us, and we are going to be here every step of the way to make sure you get every dollar you are entitled to. There is a lot of noise out there, but when you filter it down to the facts, you can make informed decisions that keep you and your family secure. The discussion around Social Security reform is not going away, and as we see more proposals for bonus payments or emergency adjustments, we will be the first to let you know which ones are actually moving through committee and which ones are just political theater. For now, focus on the payments hitting this week. Understand the timing of your SSI and keep a sharp eye on your bank account. There is peace of mind in knowing exactly where your money is and when it will arrive, and that is what we aim to provide you with every single day. The $5,000 headline might be a reality for some, a goal for others, and a misunderstanding for many. But regardless of where you fall, your benefits are a hard-earned right that you deserve to understand fully. We are entering a period of significant economic transition, and your Social Security check is the foundation of that transition. Whether you are retired, disabled, or a survivor, the rules are there to protect you, but you have to know the rules to play the game effectively. Stay vigilant against fraud, stay educated on policy changes, and most importantly, stay connected with this community. We are all in this together, navigating the complexities of the federal government one payment at a time. The 2026 COLA is just the beginning. There is much more to come as the year unfolds and the political pressure for real systemic reform continues to mount. Always remember that your voice matters, and by staying informed, you are taking the first step toward a more secure and prosperous retirement. Check your accounts, watch for those Friday deposits, and prepare for a busy February. To truly master your 2026 finances, we have to look past the immediate deposits and examine the broader calendar, because the way the weekends fall this year is creating some unique challenges for your household budget. We are currently standing at a very specific crossroads in the final week of January, where the fourth Wednesday group, those with birthdays from the 21st to the 31st, are seeing their payments land today. But if you've already received your funds, your attention must immediately shift to the coming Friday, January 30th. This is the date when the Social Security Administration will trigger the early release of February SSI payments. Because February 1st is a Sunday, the Treasury moves that massive volume of electronic transfers up by 48 hours. While this feels like a win for your wallet, it's actually a test of your financial discipline. If you aren't careful, that money will be gone before the month of February even officially begins, leaving you to navigate a very long wait until the March cycle begins on February 27th. When we talk about the potential for $5,000 payments, we also have to address the back pay phenomenon that is peaking right now. In 2026, the Social Security Administration has significantly increased its processing speed for disability appeals that were backlogged during the previous few years. This means that a wave of beneficiaries is receiving large, one-time lump sum deposits this week. If you have been waiting on an SSDI decision for 18 months, your back pay check could easily reach $5,000 or more because it accounts for every month of eligibility since your onset date, minus the 5-month waiting period. This is life-changing money for many, and it's why we see so much excitement in the comments and on social media. However, it is essential to remember that these are individualized payments. Unless you have a pending claim or a recent favorable decision from an administrative law judge, your deposit will likely follow the standard 2.8% COLA increase schedule. Looking ahead to the February 2026 schedule, mark your calendars carefully because the dates are set in stone. Following the early SSI payment on January 30th, the next major milestone is February 3rd. This Tuesday is reserved for those who began receiving their benefits before May 1997, as well as those who live abroad or have their Medicare premiums paid by their state. After that, we move into the Wednesday wave. If your birthday falls between the 1st and the 10th of the month, your check will arrive on Wednesday, February 11th. For those born between the 11th and the 20th, the date to watch is February 18th. And finally, the group born between the 21st and the 31st will receive their February funds on Wednesday, the 25th. Knowing these dates is half the battle. The other half is understanding the deductions that might be changing the final number you see. As we move deeper into 2026, the impact of the Medicare Part B premium hike is becoming more visible. The jump to $202.90 per month is a significant chunk of change, and for some, it has almost entirely eaten up the $56 average increase provided by the COLA. This net gain frustration is real, and it's something we are tracking closely as new legislation is proposed to cap these premium increases. We are also seeing a massive push for the Social Security Expansion Act in the current congressional session. If this bill gains enough traction, it could lead to an across-the-board increase of $200 per month for every single beneficiary. While that hasn't passed yet, the conversation has never been more active than it is right now in early 2026. This is why staying engaged with these updates is so important. You need to know the moment a policy shift becomes a reality so you can adjust your long-term planning. We also have to discuss the resource limit debate that is currently unfolding in Washington. For SSI recipients, the asset limits have been stuck at $2,000 for individuals and $3,000 for couples for decades. However, there is a growing movement in early 2026 to finally adjust these limits for inflation, potentially raising them to $10,000 or more. If this happens, it would mean you could finally save for an emergency without fear of losing your monthly check. This would be a game changer for millions of people who are currently trapped in a cycle of spending down their assets just to keep their benefits. We are monitoring the committee hearings every week and will bring you any news on asset limit reform the second it breaks. Another critical piece of the puzzle for 2026 is the tax season factor. Many of you are starting to receive your SSA 1099 forms, and it is vital that you understand how your benefits are taxed. If your total income, including half of your Social Security benefits, exceeds $25,000 as an individual, you could owe federal income tax on a portion of that money. This is a trap that many seniors fall into, especially with the higher 2026 payment amounts pushing more people over that threshold. If you find yourself in this position, you might want to consider having taxes voluntarily withheld from your monthly check moving forward to avoid a surprise bill next April. It's all about being proactive rather than reactive with your money. I want to spend a moment talking about the survivor benefit adjustments for 2026. If you are a widow or widower, the rules regarding the widow's limit have seen some slight modifications this year to ensure that the survivor doesn't receive less than the deceased spouse's benefit would have been. This is a complex area of Social Security law, but it is one where people frequently leave money on the table. If your spouse passed away recently and you haven't checked to see if you are eligible for a higher survivor amount under the new 2026 formulas, you should call your local field office immediately. In many cases, a simple administrative review can result in a significant monthly bump that you didn't even know you were entitled to. As we close out this deep dive into the January and February payment cycles, the theme for 2026 is clear: vigilance and education. The system is getting more complex, the numbers are getting larger, and the stakes for your financial security have never been higher. Whether you are managing an early SSI payment this Friday or waiting for your Wednesday retirement check, the goal is to make that money work as hard for you as you worked for it. We are committed to being your eyes and ears in Washington, cutting through the noise to bring you the facts you need to thrive. Keep your records organized, stay aware of the scam artists trying to steal your hard-earned benefits, and always look for ways to maximize the programs available to you. The road through 2026 is going to have its challenges, but by staying informed, you are putting yourself in the best possible position to succeed. We've covered everything from the $5,000 back pay potential to the specific payment dates for February and the shifting landscape of Medicare and tax credits. Use this information to take control of your budget and your future. There is power in numbers, and the more we understand how these systems work, the better we can advocate for the changes we all want to see. Thank you for spending this time with me today, and remember to stay tuned as we continue to track every development that affects your Social Security, SSI, and SSDI.